Mm. I have some things I want to go over at the end of today's call, so stick around for that, and then we'll leave the floor open for trade talk and anybody that wants to break down their sell positions today. All right, so um, starting from the top down, and then also taking a look at what we were talking about in yesterday's fundamental report, just so that way you all can see everything that myself and Scalper delivered to you guys to set you up for success. We're going to be going over the two buy positions that I took today on MNQ. I caught literally the absolute bottom of both of the buy positions in the meat of New York session today. Um, Eric made me second guess my analysis, so I closed the buy in this consolidation here, but we'll see what happens. I have a feeling that we're going to take the New York session highs and start to make our way towards the dark pool. D'Angelo could be right as well. We could start to see some defense thrown up, some profit taking rolling into the end of New York session, and then maybe retest the dark pool heading into Asia, and then another push back to the upside. But these were my two buy positions today. I want to break them down from the top down, starting with, of course, the fundamental backdrop, because that plays, in my personal analysis, the most important role. Then once we're done that, we'll go down to the 15 minutes and we'll take a look at what I was seeing, my areas of interest, and just everything I was formulating for you all. So first, starting off with yesterday's report, okay? In the what we are watching closely, at the end of the report from yesterday, I mentioned CPI on Tuesday. We're going to be watching, does core CPI cool, or does inflationary pressures remain sticky and troublesome? Middle East headlines, do military actions escalate or do negotiations resume? Oil prices, do they continue climbing or does crude begin retracing? Fed speakers, does the Fed reinforce a hawkish stance or acknowledge improving inflationary conditions? Bank earnings, which came out relatively upbeat. JP Morgan outperformed and frickin' blew their expectations out of the water. Nasdaq, I mentioned yesterday, can buyers reclaim the 29,693 and eventually reclaim the 39.9? And then also the crypto market, which we're not going to go over in today's video breakdown in too much detail. Okay. And then I typed out the bullish scenario for crypto and NASDAQ. Inflation coming out below expectations was our primary focus. Why it mattered, I broke this down for you guys. Lower core inflation would reduce expectations of future Fed tightening. Markets would start to begin pricing in a lower probability of rate hikes, higher probability of future cuts, lower treasury yields, a weaker dollar, or a pullback in the dollar, and improved liquidity expectations. This would historically, based off of past price action, benefit NASDAQ, Bitcoin, Ethereum, altcoins, AI stocks, growth stocks. And that's literally the setup that we got today. Okay. So heading into today's session, this is what I said to you all at 7:47, about 17 minutes after I read thoroughly through the CPI reports. I was doing my workout this rising when the CPI came out. In the middle of my workout, I was digesting the information. I was looking at Reuters, I was looking at Bloomberg, I was looking at all the terminals and gathering my analysis for you all. And this is what I said to you guys pre-market session. The June CPI report came in much softer than expected, giving markets an encouraging sign that inflation cooled more than forecast. Headline CPI fell 0.4% month over month versus expectations of a 0.1% decline, while annual inflation slowed to 3.5%, beating the 3.8% consensus. Even more importantly, core CPI, the Fed's preferred measure of underlying inflation, was flat at 0.0% month over month versus an expected reading of 0.2%, while the annual core rate eased to 2.6% from 2.9% on paper. This is a positive outcome for risk assets as it eases concerns that inflation is reaccelerating. That said, one inflationary report does not determine the Fed's path. Tomorrow's PPI report will now be in focus as it provides insights into wholesale inflation and is a key input into core PCE, which we'll get the weeks following, the Federal Reserve's preferred inflationary gauge. Another soft reading, of course, would strengthen the case that inflation continues to cool beneath the surface, while a hotter than expected PPI could, of course, quickly reduce today's optimism. Inflation also isn't the only catalyst markets are watching. We have Fed Chair Kevin Warsh testifying before Congress. Traders will be looking for any comments on inflation, interest rates, and the Fed's policy outlook. At the same time, geopolitical risks remain elevated. Overnight, we had the U.S. launch another round of strikes in Iran after President Trump announced plans to reinstate the blockade around Iranian ports and charge vessels for safe passage. This is important right here. Charge vessels for safe passage through the Strait of Hormuz. Iran responded with attacks on U.S. allies' commercial shipping, further damaging the interim peace agreement. Any escalation threatening shipping or energy supply could quickly push oil prices higher, reigniting inflationary concerns and weigh on the broader market sentiment. We will be watching closely for any announcements regarding any additional U.S. strikes, possible ground operations, shipping fees, this is important right here, or renewed diplomatic negotiations, as each headline has the potential to shift market sentiment rapidly. And then this is where I broke down my analysis for the day. Despite the geopolitical backdrop, markets have remained relatively resilient following the CPI release. At the time of writing, the total market cap is holding around 2.17 trillion, suggesting 2.17 trillion, suggesting buyers have not aggressively sold the news. In Nasdaq, buyers successfully defended the dark pool at the 29,259 during the Asia and London session trading hours and reclaimed the 29,693 coming into the New York session. Holding above the 29,693 dark pool, which was yesterday's update before this morning at 8 a.m., I updated my dark pools. That dark pool moved up to 29,716. But I said anything above 29,693 keeps the door open for continued upside toward the 39.9, with the 35.34 becoming the next area where sellers will likely test demand. So that was my analysis for today after the inflation, the rhetoric surrounding central bank speakers, and the Middle East tensions was bullish, right? I mentioned that as long as we held above the 29,693, the path of least resistance was to the upside. With that in mind, now fast forward to today's fundamentals. All right, so real quick, just so everybody's on the same page. Risk assets found support today as investors responded to a combination of softer than expected inflation data, reduced expectations for further Fed tightening, and modest easing in one of yesterday's geopolitical concerns. The primary catalyst, of course, was the June CPI report, which came in significantly cooler than markets had anticipated. The softer inflation figure immediately reduced expectations that the Federal Reserve would need to tighten monetary policy further in the near term. So pause right there. Remember, this is why I try to give you guys these pre-prep market breakdowns from yesterday's report. We mentioned that if we saw a lower inflationary figure, which would be a bullish catalyst for risk assets today, then it would lower the probability of another rate hike. And now fast forward to today, we can see that happening in real time. It says the latest U.S. inflation report showed the consumer price index CPI rose 3.5% year over year, below the estimates of 3.8. And this triggered a repricing of the Fed's hawkish bets, with traders now expecting only 18 basis points of tightening, down from 35 basis points a day ago, according to prime terminal data. Markets also found some relief after President Trump backed away from his earlier proposal to impose a 20% fee on cargo traveling through the Strait of Hormuz. In this morning's briefing, remember I mentioned to you guys some of the things to pay attention to was any announcements on shipping fees, right? And so that de-escalation or that kind of rhetoric that backtracked the possible 20% fee on cargo traveling through the Strait of Hormuz improved market sentiment slightly. Instead, he stated that future trade and investment agreements with the Gulf nations would replace that plan, while geopolitical tensions between the U.S. and Iran remain elevated. Removing the immediate threat of additional shipping costs helped calm concerns that yesterday's sharp spike in oil prices would accelerate even further and quickly feed into inflationary expectations. Last but not least, we had Fed Chair Kevin Warsh, and he maintained a balanced tone during his testimony before Congress. Now, be mindful, he is set to speak again tomorrow, so that sentiment from today could change. While he did reiterate that the Federal Reserve remains committed to restoring price stability, he also cautioned against drawing broad conclusions from a single inflationary report. Markets interpreted his comments as firm, but not more hawkish than expected, allowing today's softer CPI data to remain the dominant driver of sentiment. I apologize, I'm still sick. All right, so those were the three primary drivers of risk-on sentiment today. We saw crypto pop back above $2.2 trillion briefly before slightly seeing some profit taking. Most of the altcoins across the board are up a few percentage points. I think XPR was probably one of the top performers today. We had XPR rally over 20% in one candle, which was nice to see. considering that we were buying, or at least I know I was, some of this most recent decline in price. NASDAQ, all right? So going over NASDAQ's price action today. Super clean PA, in my personal opinion. I was a predominant buyer today, even though there were some sell opportunities in this pullback as markets reaccumulated orders at the dark pool. I was just primarily focused on the buys because of the market sentiment today leaning overall risk on due to the fundamental backdrop, right? So starting my breakdown, you guys now know what I was leaning towards at the beginning of the session, what I was analyzing mid-session in terms of the fundamentals, and now going over the technical analysis aspect of it, starting on the 15-minute time frame. So coming into the New York session starts at 8:30 a.m., which is right here in this candle. So that means that we had all of this price action to analyze prior to the session open. Okay, so starting all the way back during Asia and London session, what can we see took place at the bottom, or excuse me, at the top of a delta, right? We had a beautiful delta held formation during Asia session. Pretty sure the likes of like D'Angelo and Jordan probably caught some of this move. But sure enough, during Asia session, we came straight down into the dark pool and the delta area. We tested the delta, had a bullish reaction from it that revisited the 50 EMA and broke two previous bearish structures here and here, creating a new A to B, or a new 1, a new 2 formation. And then during the meat of Asia session rolling into London, sellers tried to test the strength of those buyers. Buyers defended the top of the delta, creating the 3. And we created another bullish leg rolling over into London session. London session started here in this area. We had a triple moving average crossover on the 15-minute. So now I'm just trying to piece together all the confluences today as to why I was taking buys. Think about it. New York session today, the fundamentals were supportive of a risk-on environment. Prior to the fundamentals even coming out, markets started to shift and print bullish order flow. We had a delta held formation at a delta. Coming into the London session, which was all here in this area, this is all pretty much London session trading hours, was relatively just consolidation. But we can see that on the 15-minute, price was trading above the 50 EMA. Price was trading now in this new bullish range, above previous bearish structure and above deltas and dark pools. And then coming into the news, which was at 7:30, which was right here. This is the 7:30 candle. London session, you can see even though price was in a relatively consolidated phase, we liquidated internal liquidity, taking out lows. And then during London session, we made new highs. So coming into the New York session today, before the news, this was the new bullish range from A to B, breaking previous bearish market structure. Right when the news came out, you can see that sellers tested the strength of those buyers at the beginning of London session. Buyers defended, the news came out bullish for risk assets, and NASDAQ had a beautiful break and continuation move above the new dark pool at the 29,716 and above previous bearish structure. So overall, coming into this New York session today, not only was the fundamentals bullish, but the structure was also printing bullish order flow. I feel like today's structure was pretty easy to analyze. But nonetheless, now let's start to think about logic, okay? So if Asia session was bullish, right, and they bought from these lows here, you can see I highlighted those down candles before the up moves that led to London session. That became my first AOI today, where as long as price was above this interest or this area of interest, above the delta and above the dark pool at the 29,259, I was still going to be looking for buy positions. Then I also simply highlighted the down candles all the way to the wicks during London session, creating the London session lows, and I extended those over to the right-hand side, and that became my second area of interest to buy from. And I also noticed prior to the New York session open, which was up here, what can we see this London session low coexists with? Can anybody tell me? The 50
The
EMA. Good
EMAs.
job,
Oh,
Swervo. So this to me became a very predominant area of interest to buy from today during New York session. So you can see the 50 EMA prior to all this price action printing. This is where New York session opened. The 50 EMA aligned with a retest of London session lows. So those were my areas of interest. That was my pre-market analysis and my pre-fundamental market breakdown. Coming into the New York session open, just using some logic. Look at where New York session got past price action compared to where London bought from and compared to where Asia bought from. So it was relatively simple for me to just sit on my hands, sharing that video breakdown that Jordan had shared yesterday or the day before in the chat that talks about patience in detail and waiting for price action to come down to you or come to an area of interest that you've predetermined in the market before reacting. Today's setup and price action called for that to the absolute T. So right when New York session opened at 8:30, I waited to see first how price reacted to the new dark pool at the 29716. Upon the New York session open, we started to print on the lower time frame sell delta helds. We broke bearish beneath the dark pool, but that did not manipulate my higher time frame bias, which was still bullish above the London session lows and above the Asia session lows. So I stayed on the 15-minute time frame for the vast majority of my trades today, at least the first one. So as soon as price came down and touched the low of London session on the 15-minute time frame, I entered with the market execution. Literally, as soon as price popped back above the 50 EMA on the 15-minute, my stop loss went nice and tight beneath the London session lows, and on the lower time frame, this is what that entry looked like. Okay. So here was the entry. I literally entered as soon as this bullish price action on the 15-minute popped back above the 50 EMA. I did not jump down to the lower time frame at all for this first trade. I honestly just stayed on the 15-minute time frame, and I closed the vast majority of this position out after we broke these highs. In the Discord, I mentioned to you all when we came up into this area that buyers needed to break above the 29,800 to the 29,840 if we wanted to see prices move higher. That was predominantly because of this sell wall that was holding price here in this area. The low of this sell wall comes in at the 29,800 and the high of the sell wall comes in at around 29,840 to 29,860. So once we smashed through that sell wall, I started closing out profit of this position and then closed the rest of this trade fully after we created a failure swing high right here where buyers got trapped. We broke a previous support and we can see the triple moving average crossover. And that is where I closed the vast majority of this position and waited for the pullback, right? So now getting into the second buy position, we can come back up to the 1 minute time frame. So on the 1 minute time frame, we have a new bullish structure leg. You can see that here. We have the 50 moving average crossover on the 1 minute time frame here in this area. Price broke previous bearish structure, equaling out this previous bearish momentum with bullish volume. And then this was the last higher low that created the new bullish range. So we now have a new A to B move, or in my mind, what I was thinking of as a new delta held formation, right? We had previous bearish price action over to the left-hand side, lower lows, lower highs, lower lows, respecting the sell wall, lower lows, lower highs. Here's the 1, here's the 2, here's the 3, here's the sell delta held for the nice scalp positions for the sell, right? And this now new buy delta held formation or break above the dark pool engulfed that previous sell delta held formation. So now we have a low respecting the previous base from New York sessions buy volume that came in during the 7:30 a.m. news. And then we equally matched this bearish momentum, retested the dark pool, and then created another A to be moved, confirming that buyers were in control, at least temporarily. So literally the same thing. I stayed on the 1 minute time frame for the next entry. I just simply, I don't do this in real time because I kind of just eye it, but taking my fib from the low to the high, you can see that price came into my personally, I like the 79% retracement. And I've tried to kind of coach you guys on this before. So I already took a trade up to this point. I was already in profit for the day. Remember that if you're going to take a second trade for the day or expose your capital again, you don't want to get in aggressively trying to chase price action. You want to give yourself the best what?
Risk to reward.
R.
The best risk to reward, right? So that means if you're going to enter in for a second position, if you're already up for the day, you're not going to start executing trades at the 50% retracement, at the 62% retracement. You're going to wait for the 79 to 100% retracement. So that way you minimize exposing the capital that you made for the day back to the market makers while still giving yourself good RRs. So as soon as we respected the dark pool, in my mind, I was sitting there just eyeing this, saying, yep, that's about 79% retracement. And simply same thing, I executed with the, I'd say that I entered on this a bit early. You can go down to the second chart to see my entry. I entered here on this initial bullish reaction from the dark pool. But because my stop loss originally was below the previous low, when we came back to retest the dark pool, my trade did not get taken out. And then once we started to print bullish order flow again, where we can see now the CyberX confluences, we have a sweep of a low, a new A to B move that takes out two previous bearish structure highs and breaks the 50 EMA, and then retests, creating the now new lower time frame or microstructure buy delta held at the dark pool. We have the 1, the 2, and the 3. And then once price continued and broke above the moving averages, you guys can see in the screenshots that I shared with you all, I started to move my stop loss right underneath of this higher low. And I literally held this trade all the way up until this consolidation where I started to take profit and close the trade fully, right? So literally caught both the bottoms of these buy positions today, just being aligned with higher time frame, pre-market session, market makers on the 15-minute, and I'm sure the hourly and above were probably printing bullish order flow. Just for me personally, I only like the 15-minute. But trading in tandem with that, and then of course seeing the 1, the 2, pre-New York session. New York session opened here. We know New York session, if market makers bought during London here and bought during Asia here, we are not going to attempt to try to buy here. We're going to wait patiently to see if buyer strength can be retested. And if they can hold, we're going to align ourselves with that volume. They did that. I entered in for that first position. Following the new market order flow or new high from the last previous higher low, I highlighted that base, waited for price to retest the dark pool to confirm that buyers were defending it, and retested the base and entered with another market execution there. So those are my two buy positions today. Very clean, very sound. Again, now is the time to really make sure that you're paying attention to not only the fundamental reports that I deliver for you all, but just updating your dark pools and your deltas in real time. I try to remind you guys this morning that they got changed. I still just find it very interesting that there's a conglomerate of individuals on the internet. I think somebody shared a screenshot today, yeah, like this. You know, you got influencers, and I'm sure, like, I don't even know this guy, but you could probably go over to his profile and he's got literally thousands of followers. Look at the logic that I teach you guys in the 2.0 content, and look at where this dude here was buying. Not to call this out, but just to show you all the difference of what myself and Scalper teach. He literally was buying. Look at his buy. This is 8:30. Look at down at the bottom, 8:30, and he was buying not at a discount, right? So what do we try to teach you guys here? If London bought and Asia bought and price is bullish, don't buy in no man's land. Look at where price was at the open. This is no man's land. Price wasn't at a dark pool at 8:30, and price was not at a discount following the 8:30 a.m. open. So buying all here in this area or trying to trade in this environment is a no-go. Absolute no-go. Right? So hopefully you guys were able to capitalize on some good positions today. I don't really think I saw anybody have a hard time with price action, but floor is open if you guys want to break down anybody that was taking sells. There were definitely some sell scalp opportunities if you were trading against the higher time frame trend, but knowing that you were. If you saw this sell delta held here where we swept internal liquidity, broke into new bearish structure. Here was your 1, here was your 2, here was the pullback for the 3. If you were trading this or scalping this under the premise that you're targeting London discount, this would have been a really great sell scalp for take profit. And then same thing here after we violated the highs, made new bearish structure. Here's a new 1, a new 2, a new 3. Triple moving average crossover, you could have waited for another 1, 2, 3 pattern. Here now we have another continuation. Here's your 1, break of previous bullish structure, 2. Here's your pullback for your 3, and price is trading underneath the EMAs. You could have sold for scalps knowing that you're in a pullback phase down into the base, where here in this area you could have started to shave off profit, and here would have been the second scalp for the day entering here with the confluences that me and Scalper teach. So there were 2 sells today, 1 and 2, and 2 buys today. Beautiful entries criteria with either CyberX 2.0 or Delta held information.